Good day, traders. Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we have a look at what's been happening in the past week on our local and international markets, and also form some views or perspectives on what we think the market's going to be doing over the coming days and weeks. Well, to kick things off, we're looking at a daily chart of the top 40, and as should be pretty apparent from a lot of the message we've been giving out in both our weekly report and also more recently in our daily reports, the market's really printed itself sideways in a fairly range bound channel at the moment, and that's on the back of falling volatility as well. You can see this here. We'll have a closer look at it in a bit. And we've had bullish days, bearish days, but really tight ranges, and fairly indecisive candles. Looking at the last trading action here, which was Friday, with today, that's being Monday, a public holiday. We had the market pushing well over its intraday lows and pushing up towards intraday highs into the close, but really until we get some kind of a break of this range, in other words beyond this previous swing high over here through that 50,500 or below the 49, let's call it 48,700 levels over here, being this low over here, we're not going to get too excited in terms of a particular directional bias on the daily time frame. At least certainly on a lower time frame you can trade that range and look for opportunities within that range. It's quite a broad range that we're looking at, but in terms of the bigger market moves, it's very difficult to form a perspective of which direction the market's going to move until it actually starts to move in that particular direction. Overall, we do have a bullish bias. I mean, the market's pushed up all the way there, put in that higher high. That's put in the shallow retracement. And the question really that we're grappling with is whether we're going to see a deeper retracement playing out or whether this market's going to continue to the upside. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, 11 trading sessions where it's just gone pretty much sideways over here. And as I said earlier, that's reflected in falling volatility. So we've had this market falling, and we're starting to approach these lows that we saw towards the end of May, unfortunately. And I say unfortunately because it's very difficult for a trend continuation or a trend following trader to actually get on board a big trend and see it riding out in a situation where the market volatilities are falling as they are doing over here. It makes it very difficult for trend continuation traders. Stochastic not giving us much perspective in terms of what's happening. It's really just bumbling around here in this neutral territory, so not much in the way of clues there. So we're going into the start of a shortened trading week. We're going to play a bit of catch up as the market opens tomorrow, and we'll have a look at where we expect that to what to happen there. As things stand now, we're probably a few hundred points down on Friday's close, maybe then around about the 49, 300s, 350s is where it looks now. But obviously a lot can change before the market actually opens, so we'll keep an eye on that. And it's going to be a shortened trading week into the end of the month. So really, I suppose one of the messages going into the next few days is that just be wary. Don't try and force the action. Let's wait and see if this market pops to the top or starts a deeper retracement to the downside. There's a lot of political activity happening at the moment, especially internationally, and that's definitely going to play out in the market. So you want to be especially wary in terms of your trading as things stand now. So that's what we're seeing through the daily lens. I'm gonna drill down to the intraday lens over here, just to give especially our daily subscribers a flavor of what's been happening. What we got here is a 15-minute chart of the top 40, and this does reflect because this is IG Markets' instrument or that one can use to trade the top 40, and there are out of market it does allow out of market trading. So what you'll see is here, you'll actually see some trading action on Monday. This is all out of market, to be honest. So what I really want to focus on is, I highlighted it to our daily subscribers, this range over here that the market had been printing into on the 15-minute basis, and we were looking for a breakout of this range, and we saw that happening on Friday as the market popped out of this box to the downside and put in the lower low. As things stand now, we're looking at a retracement that has played out, sorry, and then a continuation move to the downside that we also have in play. Markets are pretty much, you know, out of market indications, as I said, are putting us around about the 49,350, 49,400 levels at the moment, and we really need to just see which way the market moves. As things stand now, I mean, if you just zoom out here, you can see how choppy and range bound things have been, but technically the bias is to the downside, and one would favor further downside. But again, even on the shorter time frame, I'd prefer to look at those 49, you know, I'd prefer for that lower low, that swing low over there, to give way, market to push down below those levels before getting too excited about a continuation move in any direction in the short term. We swing over to the international markets. Let's have a look at this. Is the rand dollar. Yeah, this is the rand dollar. Daily chart, we're still chopping sideways, very choppy trading action within that you know, this range that we highlighted here, marked up on the chart. Markets a bit weakening a bit at the moment. If we drill down to the hourly, let's play along and actually draw in the price structure over here. What's been happening over here? Got this move down. I'll clean up the price structure in a minute. You've got this move to the downside. Even on the hourly, I mean, you can see it's pretty choppy in terms of trading action. You can actually, you know, with the benefit of hindsight, you can actually eliminate a lot of these legs over here and just go all the way up. Okay, you've got the market pushing up, retracing back into structure over here and continuing to the upside. There's no weakening trend that's playing out at the moment on the currency side of things. A bit of a shimmy there, nothing exciting. Hits that resistance level, but certainly continuing to the upside at the moment. So what we're seeing at the moment is, you know, you're seeing in a very choppy manner on the hourly a series of higher highs and higher lows playing out, which is indicative of, you know, further weakening of the currency, and that to a certain extent is you know, going to be bolstering out of 40 market and holding things up via the impact on the rand hedge stocks. Which is why, and we'll have a look at it when we look at the something like the S&P, you know, the weakness in those markets is not being fully reflected in our local markets, and that's adding to the choppiness that we're seeing on our top 40 as well. But in terms of just the pure rand play at the moment, the rand is in a weakening trend, with this currency pair putting in higher highs and higher lows at the moment, and you'd expect a push up towards the swing high level over here around about the 1340s, and even a continuation move to the upside to start playing out. So keep an eye on further rand weakness going into the start of the new trading week. Let's get back to the dailies and have a look at gold. Right. Now, a couple of things we've been highlighting to our daily subscribers on the daily charts of gold. And I marked most of it up on the screen here. We saw this push to the upside over here, as the market broke out of that bit of a range bound over there, and then we looked at a potential retracement back into that breakout level, into that $1,300 level, into that 38.2 Fibonacci retracement of this leg of the move, and we said we got to wait for a continuation move to the upside. And at the moment, just going to zoom in a bit, if you look at this daily candlestick over here, we got a nice fat bullish candle, higher close, candle closing at the top, part of its daily range. This looks like a great continuation signal. So you know, this would be a great opportunity to actually get long gold. And then we highlighted 3 target levels to the upside. The first being this previous swing high of a year, lining up around about that 1360 or just under the 1360 level. And then we highlighted the 127 extension of this leg of the move of a year as a potential area where the market could move towards, and that lined up nicely with the $1,400 level. And finally, we looked at a 1-to-1 measured move of this leg of the move. In other words, we took this leg of the move and just superimposed it off that. Let's just move it to the exact level. If the market were to come off that swing low over there, and we said, you know, we could push up towards that 161.8 level, even as if we're really shooting for targets. But as things stand now, it's certainly looking good for potential entry over here. We'd put our stops in below the swing low here. So let's, you know, if we were to get in at current levels, we'd put our stops maybe even around about the 1280 level, just to be on the safe side. Initial targets is we push for a move up to that, let's call it 13. Let's front run it a bit and call it the 1350 level. So let's just clean that up a bit. So you're looking at around about 1308 to 1350. And you know, in terms of stop levels, we're looking at something below that 1280 level. So that's just over a 1-to-1 in terms of potential reward to risk. But as I said, you know, you could structure it. You could look to take some profits over there. But then you could look to run remaining positions for secondary and even third targets over here. So certainly some opportunity playing out here on the daily of gold. We scroll down to the hourly. Hourly is an interesting one because what you're seeing here is, and this is why it's important. I think there's a nice little lesson here in terms of waiting for confirmation. We saw the market push down. The market had pushed down, put in the lower low. So it's putting a series of lower lows and lower highs on the hourly. And when we highlighted this potential retracement back into this previous structure, which lined up with the 61.8 of this move to the downside over here as a potential area to get short gold. But we did say what we want to do is we'd want to wait for actual confirmation. And you know, confirmation of a continuation move can come in a whole host of different forms. You can look for example. One of the couple of things we like to look for is lower lows, lower closes. If we're going short, or a candle closing in the lower end of its intraday range, if you want to go short. So this is just examples. You know, you have in terms of your particular trading system or strategies, you have to develop your own rules and actually decide what it is you want to use for those confirmations. But the important thing is that you have a confirmation trigger, because look what's happened over here. First, the market put in a shallow retracement back into 38.2, then it continued to the downside. Then it put in what looks like a complex retracement, but notice this, it pushes through where we envisage the market potentially starting to launch, or for the bears to potentially start to launch a counter move or a continuation move to the downside over here, pushes all the way through, and we've actually tapped all the way through the 78.6 over here. So now what's happened is there's a couple of ways we can view what's happening over here. One is we've got a complex retracement. Sure, the trend is still to the downside on the hourly, but remember, we've always maintained that once we get into that zone between the 78.6 and the 100% retracement level right there, there's a greater or an increased probability that what's going to happen, the market is going to push to the upside. Also, what we have here is a double bottom confirming, because the market's pushed down, retraced, pushed down again, couldn't take out the previous lows, and then once it breaks the midpoint of this potential double bottom. Double bottom actually confirms on this hourly candlestick here at 5 o'clock today. Now what's happened is we're actually pushing to the upside over here. Now there's a couple of ways you want to, if you're not going to, just going back to that potential daily trade, if you want to finesse the trade somewhat, or you don't want to just take the trade off the bat on the daily, you can try and take it off what's happening on the hourly, on the lower time frame. In which case, one of the things you could do, for example, is, let me just clean this up. There's the confirmation. You could have taken it right there, confirmation of the double bottom, and look to right to the upside. That would have gotten you in at about 1305. You could also do something like wait for a 61.8 retracement. So wait for the market to do something like this, retrace back potentially into that breakout level, and then continue to the upside. That's, I'm not saying the market's going to do that. I mean, it could just continue to push to the upside over here, but that would certainly, it would increase or improve your potential reward to risk if you were taking that daily trade. And it's also a way to just trade this market off the hourlies if you so choose, and you don't really want to be shooting for big targets on the dailies. So a couple of trading ideas happening in gold out there. I suppose the overall message in terms of gold is that it is looking fairly bullish at the moment, and we would expect further upside from here. So keep track of what we're doing over here. We're seeing upside in terms of the rand. We're seeing upside in terms of gold. Generally, some contradictory messages sitting in there, which again adds to the case for further choppiness in terms of the top 40 itself. Let's look at the equity markets, starting with the East, Hang Seng. And one day I'm actually going to make a note of which one of these. Here we go. Right, now this is quite interesting over here. For the first time in quite a long time, what we're seeing here is a potential break of structure to the downside playing out on the Hang Seng. If the market were to close below that 27.46 as we've highlighted over there, and it looks like it's coming close at the moment, we would regard that as a break of structure. Also notice this right here. Market has pushed up again, put in a higher high but not a higher close. This is a classical opportunity or illustration of a potential double top on the daily in the Hang Seng. So if we do get a close below here, you could regard that as a potential or an opportunity to actually short the Hang Seng. And if you were to do that on the hourly, your projected targets, I take it from the top of the swing, this higher high over here, and I'd actually project it all the way down to around about those levels over there. Now there's a bit of price structure lining up over there, not much. So if you wanted to be a bit more conservative, you could look at these levels over here even as potential targets for a shorting opportunity. The problem is that you'd have then is you wouldn't have a great, or you might even have an inverted reward to risk. Another way to play this, as we do with all our double tops, should this confirm, and that's important, wait for it to confirm before you call it a double top. You can wait for, let's say it closes out over there somewhere, wait for a pullback into the 61.8. But again, early days, I think it's important to wait to see what happens over here before you try and get involved. So you basically, what we're saying is you can take the short off the bat, try and ride it down to those previous swing lows over here, or even that bit of structure over there where the projected double top, where the double top projects to. Or you could wait for a retracement back up into structure once it confirms, and try and get short and ride it to the downside as well, which would give you an improved reward to risk. What's important here though is that we are seeing, and as I said, for the first time in a long time, we're seeing a potential break of structure. Wow, we haven't really seen that this year yet in the Hang Seng playing out. Switching up to the hourly, that's the 2 hour. Let's just fix that up. Switching up to the hourly. Yes, and what's interesting here is we'd highlighted this. You know, the market had pushed to the upside, putting the higher high. We were in a complex retracement, and we lined up the 61.8 with this previous price structure and said if the market pulled back into that zone over there and continued to the upside, that would have actually been a great opportunity to get long. And we certainly saw that happening, and market pulled back all the way down to here. And there are a few candlesticks over here where we would probably, you know, this one over here, that one over there, higher close, and it's in the top end of its range. This would have been a great opportunity to actually go long the market. But notice what happened over there. The market just fell to the downside, and we would have quickly gotten stopped out. The result is where we find ourselves now is it's a clear break of structure to the downside on the hourly as well. And again, what we would be waiting to do is we'd wait for some kind of a retracement back up here into previous structure. Let's just put a Fibonacci retracement on there. You know, even into that 27,500. I don't want to preempt it now. 27,500, maybe around about the 38.2. Those would be levels to watch for potential continuation move to the downside. Wait for retracement, continuation move to the downside, and that could play in pretty well with a shorting opportunity on the daily as well. So do keep an eye on that. So that's what's happening on the Hang Seng. Let's have a look at the DAX. Nothing much on the hourly, on the daily. One of the things we highlighted is potential retracement move over here. The market pulled back all the way. It's quite a, you know, in terms of, it's quite a big distance, more than 200 points to the downside over here that the market could retrace while still maintaining the its sort of bullish view, for want of a better word. And it's actually it would also fall into the class of a 61.8 retracement off this double bottom over here. Notice double bottom confirms, market pushes up, and we're waiting for that retracement back into the structure, back into that 61.8 before continuation move to the upside. So nothing, I mean, we're still bullish on the DAX, nothing much else to say on the daily. One looks at the hourly. Nice play out on the hourly in terms of the trade setup that we'd highlighted over there. One of the things we said was we were waiting for, we had this push to the upside, and we had this retracement back down over here, and we were waiting for some kind of continuation move off to the 61.8. Market actually pulled back all the way in, and right there we highlighted a potential entry point. We'd actually lined up this flag for our daily subscribers, I believe, and notice how the market just pushed up, boop, and hit our target levels over there. So in a few hours that would have been a nice trading opportunity for you to take advantage of. So that trading opportunity is done. What next now? Market pushes to the upside over here, puts in a let's have a look here. Just clean this up first. Doesn't put it, I mean, puts in a higher high but not a higher close. So what are we seeing over here? We're seeing a bit of range bound activity playing out, to be honest. You just flag that. What's happening is the market's pushed down, then it's come all the way back down, chopped around a bit, hit the bottom of this range over here, and then it pushed up again, and now it's chopping down again. So we've got a bit of range bound activity over here. Technically, you know, we still, let's just have a look. Yeah, we still got a bit of upside bias over here, but on the hourly, it's certainly, we want to see a break of that range over there, something pushing through the 12,650 or down through the 12,550 would be what we want to see before you get too excited about further trading opportunities on this time frame on the DAX. The FTSE daily one, the one we've been avoiding. Yeah, just that messy price structure. I don't even want to talk about trading this thing on a daily basis. It's just a mess to me, until we break out of this deep complex retracement. I mean, the sense is that, you know, we've put in such a deep retracement relative to this leg of the move over here that we, you know, we almost do favor break to the downside over here. So we'll continue to watch for that on the daily, and then, you know, react from there. If you look at the hourly, hourly is tricky. We'd highlighted this entry level over here for the market to continue to push down, and notice I'd pushed down about halfway towards our targets over there before it popped to the upside. So if you were involved in this, you would have been stopped out, unless you'd done a bit of a stop roll over there. But as things stand, again, it's a complex, but it's a messy retracement at the moment. So we pulled back almost all the way back into the 61.8 of this leg of the move over here now. Not something I want to do multiple entries on, to be perfectly honest. I'd rather stand aside. There are better trading opportunities out here on some of the other international markets than to get involved or jump back into the FTSE again, even on this hourly time frame, because the market's just chopping along at the moment. But certainly you still would favor the downside. Maybe you want to actually just wait for some kind of a break of that, move below that, out of that structure over there, before you to get too excited about trading this thing. So that's what's happening on the FTSE. And finally, I think, let's have a look at what's happening on the US side of the markets with the S&P. Sorry, let me just find the right instrument. We've got all my markups. Nope, sorry about that. There we go. Righto, so what's happening on the S&P? We've got this push up, market's put in the higher high, now it's put in the lower close over here. Looks like we're retracing back out into this breakout level. Where can we potentially retrace back to on the daily? Well, put a Fibonacci on there. Multiple levels. The first obvious one would be this 38.2, which lines up with this previous little mini swing high over here. So that might be, for a shallow retracement, that would probably be the zone I'd be looking for the market to retrace to before continuing to the upside. I say continuing to the upside because structurally, this market is putting in higher highs and higher lows. So even though there is it is bearish in the short term and it is retracing, you'd expect this to be a retracement within an uptrend. On the hourly, what we saw over here was this market's pulled back into this zone that we highlighted over here, bounced to the upside. We highlighted the potential bounce. It hasn't bounced all the way before it roll over and drop to the downside over here. So let's just draw in the proper price structure, take it from there. Market's pushed to the upside over there, not very cleanly. Mini retracement, push to the upside, doesn't hit the previous highs at all, and now it's pushing. It's actually broken structure. Let's call it a break of structure down. We've actually got a, let's call it there. Right, we've got a break of structure to the downside playing out over there. Very sharp break of structure as well. Just clean up the rest of this chart, see what sense we can make of it. This is messy, indicative of a lot of the short term, or the I think the political news playing out in the US at the moment. What's interesting though is that the market hasn't really held that level, that break. It's pushed down, but it hasn't put in a lower close. It's put in a lower low, but not a lower close. So really, this is not a market I'd be trading without some kind of a directional confirmation. That's the range I'd be looking at, around about the 25.10s 2490s, and what we're looking for is a close outside of that range. Once we get that, then we can start playing around and seeing which direction we think the market's going to go to from here. As it is now, it's very choppy, so just be very wary in terms of trading the S&P. So guys, that's pretty much it from our side, and as you can see from the analysis, and I hope you find the analysis useful, there's a lot of choppiness happening, a lot of political news influencing international markets. We're seeing a lot of markets in retracement. We're seeing a lot of markets potentially breaking to the downside. At the same time, we're seeing a currency pair which is highly influential in terms of our local top 40, the rand dollar, pushing to the upside, which is going to hold our market to the upside. So we anticipate a lot of chop in the shortened week ahead. What's important to us is to be as circumspect and careful in our trading as possible, and we're going to wait, especially looking at those ranges over there. Look for a breakout either to the upside or the downside before getting too excited or attached to a particular market direction. Guys, that's pretty much it. To our daily subscribers, we won't have a daily update, and I've done a more detailed weekly perspectives report, especially because of that, tomorrow, but I'll certainly be back on Wednesday night, potentially Thursday morning, to try and give an update and see what's been happening in the markets of the previous trading sessions. In the meanwhile, to all of you, I wish you the best in your trading in the shortened trading week ahead, and I shall chat to you soon. Cheers.